Okay, let's unpack this. Today, we're taking a deep dive into something truly fascinating. Understanding the financial heartbeat of an entire banking sector. We're not talking about just one bank's quarterly report. This is a comprehensive, multi-year analysis of an entire industry, really designed to give you a shortcut to being, well, properly well-informed. Our goal is to uncover the bigger picture, you know, the interconnections and maybe some surprising facts that pop out when you look at all that aggregated data together.
And the mind behind this particular analysis is Arslan Hussein. He's a highly accomplished business intelligence and financial data analyst. We're talking over 12 years of experience here. He's currently an assistant vice president at Zarai Tarakwati Bank Limited. And get this, he's automated financial statements for over 500 branches there. So his expertise in things like Power BI, data modeling, and, crucially, connecting financial and operational data. That's what underpins the kind of insights we're about to explore.
Right. So our mission for you today is pretty straightforward. We want to show you how this complex industry data isn't just gathered, but how it's distilled into actionable insights. It should offer you a unique vantage point on the banking landscape. Hopefully, you'll see the forces shaping a whole sector, maybe have a few aha moments along the way. Okay, let's start by setting the stage a bit for this deep dive. We're focusing specifically on the banking sector of Pakistan. And what's really critical here, as we said, is that this isn't some narrow single bank view. No, instead, the analysis consolidates financial statements. The profit and loss accounts, the balance sheets for the entire industry.
Right. All the major players, all the specialized institutions, they're all brought together. And built right into this system is the calculation of specific, important ratios, really tailored for banking, that gives us these highly specialized insights, and it's drawing from years of historical data, too.
And what's fascinating, I think, is how this industry data isn't just treated as one big lump.
Exactly. It's intelligently segmented right from the start. It breaks down into public sector banks, private sector banks, foreign banks, and specialized banks. And this initial classification is actually incredibly strategic. It immediately allows for direct comparisons. So you can see, for instance, if private sector banks are maybe outperforming public sector ones on certain metrics.
Or how the foreign banks are adapting.
Precisely. How they adapt to local market conditions. It really clarifies their unique contributions and maybe their challenges within the whole financial ecosystem.
And this segmentation, it goes even further, doesn't it? It offers quite remarkable flexibility.
It does. Beyond these predefined categories, you can actually select and combine any specific banks you want for a tailored analysis.
So, like, if I wanted to look at just Allied Bank and Al Baraka Bank together.
Yep. You could group them to form your own custom segment. Compare them head to head. And that's powerful because it lets analysts like Arslan Hussein define their own competitive landscapes. They can move beyond those rigid preset boxes.
Okay, makes sense. Now, the core of this analysis, you mentioned ratios, specific banking ratios.
And one crucial insight comes from ratios like D3, which represents net markup interest income, divided by D1, the gross markup interest income.
Okay, D3 over D1, what does that tell us?
Well, it's not just some random calculation. It's actually a pretty quick check on a bank's operational efficiency. It reveals how effectively that bank converts its gross interest earnings into actual net income, after expenses. And each ratio in the system is detailed. You see the components, numerator, denominator, and crucially, its purpose. It tells us exactly what it reveals about a bank's health.
Right, the why. And then you bring in visualizations.
Yes. That's where it gets really interesting visually.
Yeah.
These numbers are brought to life, revealing relationships you might just skim over in a spreadsheet. Think about graphs that combine parameters, like deposits accounts with advances. They clearly illustrate that inherent, almost symbiotic connection between the two.
You see them move together.
Exactly. Then the analysis overlays things like average policy rates. That's the yellow dotted line in the source visuals and closing policy rates. The blue dotted line against income and expense heads, like markup income and markup expense.
So you can see the policy rate impact directly.
You got it. This visual comparison quickly shows how these key financial metrics respond to central bank policy rates. That's a major external factor driving profitability, right? You can literally see policy rate changes happening before the shifts in income or expenses.
That's powerful visualization. Now, even sophisticated systems evolve, right? You mentioned there was an early challenge.
That's right. One early, let's say, gap was that the initial analysis was kind of silent on the market share of individual banks. It gave you the big picture, the overall industry performance, but didn't clearly show how big a slice of the pie each bank actually held.
Okay, so how is that addressed?
The solution was actually pretty elegant. Integrating pie charts seems simple, but these visuals instantly clarify market share. Makes it far easier to compare individual bank contributions and understand their relative standing just at a glance.
Yeah, I can see how that would help. Give me an example.
Sure. So with these market share insights, you can quickly grasp a bank's position. For example, Mizan Bank held a pretty significant 7.7% share of deposits across the entire industry in 2023.
7.7%. Okay.
That immediately tells you something about its scale in attracting customer funds. Similarly, HBL accounted for a substantial 13.4% of the industry's gross advances.
Wow, 13.4% of all lending.
Right. These specific figures precisely clarify an individual bank's market position. It provides crucial context for any competitive analysis.
Okay, moving into some more advanced insights now. Let's talk about AVC analysis. Sounds like a smart way to categorize performance.
It really is. Imagine discovering that just, say, 8 banks are driving nearly 2/3, like 66% of the entire industry's results. That's the kind of thing ABC analysis highlights. It groups the top performing banks, the ones contributing up to 70% of total industry results, into category A.
The heavy hitters.
Exactly.
Yeah.
Then the next 22% fall into category B, and the remaining smaller contributors, maybe around 10%, are in category C. It gives you this immediate high-level understanding of where the bulk of the industry's performance is actually coming from.
That leads to a key question, though.
How do banks move between these categories?
Yeah, exactly. Does the data show that?
It does, and that's where the multi-year aspect is crucial. It reveals those dynamics over time. For instance, the source material notes that Allied Bank was no longer part of the top A banks for investments specifically in 2023.
Interesting. So it slipped out of that top tier for investments.
Right, and that isn't just a change in rank. It signals a real shift in the competitive landscape. Maybe another bank really intensified its investment strategies that year. This kind of movement highlights the constant churn and competition happening within the sector. It's not static.
Makes sense. Building on that, there's another type of segmentation called top-end banks.
Yes, another layer of flexibility. This lets you select, for instance, the top 2 banks within each specific sector, public, private, foreign.
Or just the top 5 overall.
Or the top 5 or top 10 overall banks based on a specific metric you care about, like investments or gross advances. This targeted filtering gives you direct comparisons just among the leaders in that area.
And the insights can be pretty stark, I imagine.
They can be. For example, the analysis showed the top 5 banks combined hold almost half, nearly 50% of the entire industry's gross advances.
Half the lending market in just 5 banks. That's significant concentration.
It is. Shows where the lending power really resides.
So, okay, how do these analytical tools help us understand real-world events, especially major disruptions like, say, the pandemic?
This is where the analytical power really shines, especially with something called the transition matrix. Arslan Hussein actually called this one of my favorite analyses.
A transition matrix. Tell me more.
Okay, imagine you're tracking banks that were showing increasing profitability, say, just before COVID hit, like in 2019.
Right, heading into the storm.
Exactly. The transition matrix powerfully illustrates both the immediate hit and then the subsequent recovery, or lack thereof. So get this. Out of 27 banks that were showing an increasing trend in profit before tax in 2019, right before COVID,
Okay.
8 of them showed a clear decreasing trend the very next year in 2020, a direct impact. 1 remained stable, and maybe surprisingly, 17 were largely unaffected in that specific metric initially.
Wow, so a mixed initial impact.
A very mixed picture initially, but the story continues. If we fast forward, from 2022, the market largely recovered. Out of 26 banks tracked in that later phase, 23 regained or retained their positive position.
A strong bounce back for most.
Yeah, and the analysis suggests this was largely driven by the increase in policy rates around that time, which, as we discussed, correlated directly with improved bank performance across the sector.
Fascinating how you can track that shock and recovery. Let's connect a few more dots using correlation analysis.
Okay.
This technique, it's about mapping the dance moves, right? Which financial metrics move together, which move in opposite directions?
That's a good way to put it. Are they perfectly in step or pulling apart? It helps us see those underlying quantitative relationships, confirming intuition or maybe revealing surprises.
So what are some specific correlations found in this banking data?
Well, what's fascinating are the precise relationships observed, often proving what you might suspect. Markup income and markup expense, for example, are shown to be perfectly correlated with each other,
Makes sense.
and also perfectly correlated with policy rates. As we said, central bank adjustments directly impact a bank's cost of funds and earnings on loans, so they move in tandem.
Okay, what about things that move opposite?
Good question. The spread, that's the net income after markup expenses, shows a negative correlation with markup expense and an exactly inverse relation with the markup expense to markup income ratio.
So, translated,
Yeah.
as the relative cost of funds goes up, the bank's net spread tends to shrink.
Precisely. It clearly shows how rising costs squeeze that margin, impacting profitability. And less surprising perhaps, but still important to confirm, there's a clear direct relationship shown between cash dividend paid out and earning per share, performance translating to shareholder returns.
Got it. So all this sophisticated analysis, this ability to weave together all this granular data from an entire industry and pull out such clear, dynamic insights, it really comes back to the analyst's expertise, doesn't it?
Absolutely. It ties directly back to Arslan Hussein's comprehensive skill set. His background in building management information systems, automating those financial statements for hundreds of branches.
Yeah, that's practical experience.
Exactly. And his proficiency with the tools, Power BI, Oracle, SQL, now even Microsoft Fabric, these are the foundations needed to generate these kinds of comprehensive insights. And this isn't just academic theory, right? This is how sophisticated analysis gets generated and applied in really critical real-world scenarios. Think risk-based auditing, fraud investigation, delivering precise reports that genuinely matter for the bank's operations.
Mhm. This deep dive truly highlights the immense power you get when you combine that granular financial data with sophisticated analytical tools and, crucially, those multi-year perspectives. It paints an incredibly clear, really dynamic picture of an entire industry. It moves you way beyond just looking at individual numbers to understanding those bigger systemic trends and interdependencies.
Which I think raises an important question for you, the listener. How can you potentially apply these kinds of analytical frameworks? Thinking in terms of sector-wide data, maybe understanding market share dynamics in your field, categorizing performance with tools like ABC analysis, identifying those crucial correlations. How could that help you understand complex systems and make more informed decisions?
Right. In your own professional life or even personal interest.
Yeah. What hidden relationships, what unexpected trends, or what critical insights might you uncover if you started looking at the aggregated data, the broader patterns in your own domain?
That's a great point, because the ability to look at an entire industry or any complex system, identify top performers, track transitions, understand how different variables correlate, that feels like a superpower in today's data-rich world. This kind of comprehensive analysis, it really empowers you to anticipate shifts, evaluate strategies, and truly be well-informed, not just about a single company or entity, but about the forces shaping an entire domain. Definitely keep an eye out for how these kinds of data-driven analyses are continually transforming decision-making across all sectors. It's reshaping how we understand and navigate complex environments.